Good afternoon, traders. This is Christian from Tropic Trade Group, and this is your end of day video for Monday, March 3rd. Well, you could tell by the colors on your screen that this was not a particularly good day for equity markets. Big reversal. You're probably going to hear a lot today, bearish engulfing. I'll explain what that is. We'll talk about that and what the indices are. Before I do any of that, risk disclaimer in front of you. Everything that we're going through is for information purposes only. Not giving out any advice or anything like that. This video is for education purposes only, but please read the full risk disclaimer right there. I'll also talk about, I'll try to talk about sentiment and whether or not we're washed out or things are oversold or if there's fear in this market. I've heard this a lot on Twitter, and I will talk about what I think. Everybody has something different. So whatever works for you, meaning if you find something that you think is oversold or a good indicator and it ends up being a good like timing reversal indicator, keep using it, right? But what we don't want to be doing is just throwing things out there that someone says, oh my God, this is oversold, right? And sentiment is really low. When you see something like this, right, dig into it, do your own research, and figure out if this is something valid, especially if it's something that you've never heard before, right? If somebody throws out some term, right? And I did this with somebody. I'm not gonna call anybody out because I don't do that type of thing. But I had seen something where somebody mentioned a stat on Twitter over this weekend, and I said, you know what? I said that's not right. And so the point of that is not to go after people and tell them that they're tell them that they're wrong, but the point is do your own investigation and then make your own conclusion. Don't just believe somebody on Twitter, whether it's me or whoever else on Twitter. Do your own independent research, right? And again, that's also not just with this type of thing, but it's with anything. It's with charts and so forth. And there's so much good information that you can extract from Twitter and from other traders, but you've got to validate that information yourself. And that's how you use the information. You don't just use stock tips from somebody or, something like that. You put it in your own model, you investigate it and find out if that's something useful for you. That's how you do it. You just don't take somebody's word verbatim and say, okay, that sounds right to me. So let's talk about what happened today first, and then we'll talk a little bit about sentiment, and I'll go through what I use. But here we are, S&P, another reversal day. I think it's so difficult when we start the day when there's a gap up like on the weekend or just a gap up in general. So a couple of things that we know, and I had talked about this. I do a pre-market prep, which you can find on YouTube. It also comes out on Twitter. We start that every day at 8 o'clock. I do that with Joel Elconin and Dennis Dick. And we talk about what we are observing in this market. And one of the things that I said is that selling or buying the close and selling the open has been very dramatic in terms of that trade has worked. And it worked. I heard somebody talking about this on Bloomberg Radio this morning. I think last week, as bad as last week was, if you would have bought the close and sold the open, you would have been up for the week. You would have been up, I think, 80 basis points. I think if you did this with SPY, right? And this one I did not measure myself, but it sounds right because I think the majority of days last week we gapped up a little bit. And then what happened is once we got to the open, we sold off. Right. And buying and selling the open and buying the close would have yielded you obviously good money too. But that's what we're getting right now is that we cannot hold any type of these moved ups. Now, another thing that I thought was very confusing was that we rallied big in the last hour on Friday. And that has to do a lot with end of month rebalancing, right? And end of month trading. Um, Sometimes it carries over, sometimes it doesn't. It's very noisy when something like that happens. And I would have said the same thing if we sold off hard into the end of the day on Friday too. This is a mechanical type trade that happens, and it only happens once a month. And those parties don't continue to do anything else. They just have a huge amount of buying or selling to do at the end of the month, and then that's it. It doesn't mean that the market is going to carry from there. So I had addressed a lot of these things in the weekend video. The weekend video was very long for members. I apologize for that, but there's a lot of these. There was a lot of these points that I wanted to go over, but I understand why the close like that, got everybody excited. For me too, I wasn't expecting that type of a move in the last hour of trading. So, just looking at the 5 minute here, right? Just to kind of review this, right? Here's it was literally, the last hour of the day. If that didn't happen, right, the sentiment would probably still have been pretty negative coming into today. But here's where we are, and this is what we did, right? And you know, we we get to the open. Where is the open? Here. And again, it's very similar to what we saw in the majority of days last week, unfortunately. A swoosh down, maybe not as dramatic as what we saw like, maybe Wednesday and Thursday, which is probably in one of these days, but we went down, we stabilized for a little while, and right around 1250 we began to go lower. Now, I get it. People want to blame Trump, right? And the administration. That's fine. Like if that makes you feel better, but that wasn't why NVIDIA was down 7%. NVIDIA was down 7% before Trump started speaking today. So there was already a lot of damage. Another thing too, um, if you're going to blame Trump for the move down today, then what are you going to say about crypto? Right? Because the administration, says that, they're very bullish on crypto and crypto's still going down, right? And the whole move yesterday, from that gap up, right, was taken away today. And that has nothing, I don't think that has anything to do with, the administration didn't come out and say that they're regulating crypto, right? So why did it sell off? Well, it's because we're in a risk-off environment, and again, the current administration is not helping matters, and I would agree. I would agree with that with the tariffs, but I think that I really think that we got overbought. We haven't had a correction in a while, and we're due for one, right? And it's a little bit of a political storm that's going on too, which again is not helping things. But here's what happened, right? People took advantage of this big move up, this knee-jerk reaction that happened on Sunday when nobody's paying attention. And what did the market participants do with this? They took it and they sold it, right? So this goes right back. We went right into resistance and it got rejected. Right. And that's a pretty decent rejection. And these moving averages are rolling over. All right. So let's go back to SPY for a minute. All right. So yes, bearish engulfing for the day. The one positive I guess you could say is that we didn't close on the lows. We also haven't taken out these lows from January. So all of this, like, where people are some people are starting to really get angry about this market. The SPY is still not taken out the lows from January. So is it ugly here? Yeah, this is not as I said last week, this is not a position of technical strength. We're below all these moving averages. We got rejected. We closed right at the 5-period moving average. We rallied up to almost to the 50-day moving average this morning, and that's a rejection there too. Right. So this market is not done with going, it doesn't seem like the volatility is done. We also went higher in the VIX today, right? The 20, I think we jumped above 24. That's since we started to make our way down here. That's the highest level that we've been in so far. Okay. So we're sitting here now, we're back below value and this is risk off. So what do you do in these situations? All right. Well, I could tell you what I do because I'm not giving out, of course, any advice, but you just reduce risk and uh, you wait for assurance that that institutional buyers have stepped back in and are buying the dip. Remember, you or I, doesn't matter. We can't go out and buy the dip and move the market, right? It's the institutions that have to be involved. And right now, the institutions are selling. They're taking every time that we rally. Again, besides what happened with month end, right? For now, they're taking advantage of these moves up and they're liquidating, right? I want to talk about before I go to the Q's chart, but look at NVIDIA, right? This whole AI trade is coming undone, right? Whether you believe that or not, is another story. But, like I said, NVIDIA went up on Friday. Look at what it did today, right? And I think this is right around when Trump started speaking. The stock was already down like I said, it was either 6 or 7% at this point, right? Maybe it was here and then it bounced up a little bit. But this AI, and look at the power companies, right? Because again, the issue here is NVIDIA affects, right? This is the king of AI, and it's affecting so many companies. Look at this name today. Look at this is CLS. This was a darling a couple weeks ago. It was down 13% today. And look at it, right? This is the beginning of the day. This is when Trump started to speak. So again, that's not my point. That's not the point of this video that I'm trying to make here, but there was already damage being done. I don't think there was I didn't see any news on the stock. It doesn't matter. I don't care if it was downgraded or what. Stock shouldn't go down 13%, right? So here is when Trump started to speak today. Stock was already down 13%. I think it went down even further because it bounced up at the end of the day. So I mean, this is an unwind. But in my belief, this is a big unwind of all the AI fluff. And I think everybody knew at some point that all this money, all this hot money that's been in this AI trade was going to funnel out. Now, I'm not saying that AI, like there's not going to be AI anymore. There will always be artificial intelligence. And it's been that way for a long time. But all these trends and so forth, they're all coming undone. They're also most of these stocks are very expensive, right? So all of the expensiveness is coming out of the market. What's going up, and I talked a lot about this in the weekend video, but let me just go through the cues. I just want to show you because I go through these all the time. It's still above the 200-day moving average. We almost took out the VPOC to the downside, but that's a rejection. This is the first thing I had a whole bunch of questions because in this gap up that we had this morning was, hey, Q started the day inside value. One of my main questions was, is price going to be able to hold this 509.92? And I think that you could tell that it didn't. It didn't even come close, right? And that already started to sell off like at the open, guys, right? Some type of like bear consolidation down, some type of bear consolidation down. That's what this market has been doing now for a week. So it is a risk off tape. IWM, oh my God, this looks horrific. I'm being dramatic, but the bearish 80% rule, this is the only index out of the ones that I just went through, SPY Qs. IWM is the one that's really breaking down, right? That is now broken into the value area for the year. Now you've got some support here. Maybe it might find some buyers and might bounce here, but it's below the two. Make no mistake, this isn't a downtrend, guys. The IWM is below its 200-day moving average and breaking down. So it's the first to really fall down. So, does this need to find a footing? Perhaps, the small caps, I think are, they weren't easy to trade last year either. I didn't really like how IWM traded last year because it was all about gaps. It was gaps all over the place on economic data and on Fed, right? Every time this thing went up like this, it was because of some type of data, right? That's not easy. So anyway, I want to move on from that. But where was I going next? Right? I went over, here's my note from this weekend. Let's see if I can bring this up. All right. So I talked about this on Sunday. I said, hey, this is the stocks that the market likes right now. Low minimum volatility stocks, right? And it could be for several reasons, right? It could be because we are in a headline driven market. It could also be that the market, the economy is headed to a recession, right? And growth is slowing down. I was on, speaking of pre-market prep this morning, Ryan Craver, uh, who looks at retail, who looks at retail stocks. I asked him a question specifically about whether he's seeing a slowdown. A lot of retail companies report monthly sales data. And I asked him, I said, what is the monthly retail sales data showing? Is it showing that the consumer is slowing down? His answer was yes. He's seeing it that things are starting to trend down in terms of overall spending, right? The consumer is getting tighter with what they're doing, right? These things go in cycles, right? And we know that there's layoffs that are coming for government, or have come for government employees. Right. This, like, unfortunately, guys, and again, I don't want to talk too much outside of technicals and so forth, but this is going to get inflation down, right? And it could be that hard landing that we used to hear about. We haven't heard about that probably for 6 months. So remember soft landing versus hard landing, and people would debate that on CNBC or wherever, right? We could have a hard landing now, right? But it will crush inflation too, right? I know that the tariffs and so forth could be inflationary too, but you start wreaking havoc on spending, that's how you bring inflation down, right? Right. And then if that happens, what is the Fed going to do? Right. The Fed is probably going to cut interest rates once we get to the back end of the year. But again, you've got to get through this difficult time in the market to see the light at the end of the tunnel. But I really think that they're going to defeat inflation at this point because they're starting to wreck consumer spending. So what does the market like? Insurance stocks, right? It likes garbage stocks, waste management. I mean, these are boring stocks. These are value stocks. But I mean, look at the European financials. For European financials, with the SPY down today, what, 1.7%, IWM down 2.7%. What did European financials do today? They were up again. Now, again, that's a toppy looking candle, but they were up 1.8%, right? So what am I trying to illustrate here? I'm trying to illustrate that people don't want to be in high priced risky stocks right now, right? High beta stocks right now. That's not what people want right now. By the way, I continue to so what I try to do is give you the information and you can make your own decisions. One of the things that I stressed with all of those high volatility stocks going up is, it may not, it doesn't mean that you want to necessarily go out and start buying those because they've run a lot, but at least you're giving an understanding of like what's going on in this market right now. All right, let's talk. I mentioned I would talk a little bit about sentiment, right? And do I believe that sentiment, right? So I mentioned the fear and greed index, right? So the CNN fear and greed index, right? Extreme fear. Everybody's like, aha, right? That means the market's going to turn around. Go through the components. Do you think that this is the best gauge? Right? This is a homemade index that they came up with different components, one of which is the VIX, right? They're saying that the VIX is at extreme fear, right? Do you think that the VIX is at extreme fear? Because I don't. Above, I get it. We finally got a little bit hotter today, but the VIX at 20 or 21 is not extreme fear. So do you see where I'm going with this interpretation? Right? You have to go through like I said in the beginning of this video, go through what somebody is telling you, understand what that survey is or what that model is, because to me, the VIX at 20 is not extreme fear. All right. So let's look at the VIX. So first of all, I'm showing the VIX from a couple years ago, from 2020, because this is what you want to start to see, in my opinion. All right, let's see if I can. You want to see once we spike up like this, that the VIX doesn't, like in this situation, right? So going back to the beginning of June 22, um, sorry, the big January of 2022. Look at what the VIX did. It went up to 40, right? Look at how elevated it is. So first of all, I wouldn't start comparing now to 2022 because it's not the same level of volatility, right? So I would make sure that you understand that first, right? Because there's going to be a lot of comparisons to 2022. We're not at a VIX of a 39, 40, right? We got up to a VIX of 24 today. So again, elevated, but not, this is more extreme, right? But you could look at all these different occasions when once volatility backed off, right? And I would call these bouts of volatility. Let's look at how the VIX is now. Does this look like volatility is this putting in a toppy candle to you? There's a little bit of a wick on it, but it's not like this. And again, I'm not saying that that has to happen, right? Every bout of volatility is a little bit different, but you go back and you look, right? So I think what you want to see is it start to kind of go back and get back below 20 and stay there, right? And also maybe like a very toppy looking candle. That's what I would say when volatility is starting to subdue. Here's the volatility of the VIX itself. Sometimes this gives some signals. That's not a signal today, right? I would say volatility is still heightened. Again, go back and look, right? Look at some of these things. Like here's a good example. This is what you want to see. The volatility goes higher, and then you have a full red, or in this case on Bloomberg, it's a blue bar. Same thing here. That's when you know like buyers are coming in and volatility is starting to subside. Let's look at today's candle. Is it blue? No. Right now, again, this was a bit confusing. That blue one on Friday. Right. Something else. Okay, so that's one thing that I look at, right? Is what happened with volatility over the trading session, right? That's one thing that I use that helps me. Number two, the equity put call ratio, right? When there's a ton more puts trading, I don't care if they're bought. So people are like, oh, well, the puts weren't bought. It doesn't matter. It's the level of the put activity, right? This is not updated for today, but this is nowhere near an extreme blow off where everybody's rushing for the exits and buying puts. Sorry, we're not there yet. And you could look at other periods, right? Look at each one of these spikes. That is usually when the market begins to turn around. It's a contrarian signal, right? It, 0.67 is not, and that was last week, right? That is not extreme, right? So again, go back to your extreme CNN fear and greed, right? I, that's if they're not using the right models, like in my opinion. Those none of those things are at extreme fear when you go through the components. Sorry. And again, this is my interpretation. All right. What about the AAII survey? Okay, if that helps you, go ahead and use it. That has never helped me in the 20 plus years that I've traded. I've never said, "Oh my God, the AAII survey is shows more bears." Never have I ever used that and to give me some type of a signal. Why? Because it's people add this respond to the survey in one way and they could be positioned in the complete opposite way. They could say, "Wow, I'm really bearish," and they could be leveraged long. Doesn't make any like it. And again, if you use it and it helps you, go for it. Something else that I use is the NIMO and the NAMO, right? Which is the oscillator for up versus down, right? That could give a contrarian sell signal. Have we seen this for NIMO? No, not even close. It's not even close to being an oversold level or fear or whatever you want to say. What about the NAMO? Because of certainly we've seen more selling in growth stocks. Okay, that's gotten close. But did it get to oversold around -70? No. I'm sorry. So again, go through those components because I'm telling you, the VIX at a 21 is not extreme fear, guys. All right, guys. Be patient. Again, what I do in these situations is I reposition myself, right? And I would also give yourself a break. We talked about this too at the end of the day, in the end of the day at the trading room, how fast this has happened. Just 2 weeks ago, uh, the equally weighted Qs, QQEW, were making new highs. The IBD 50 ETF were making new highs, right? That doesn't mean that you don't sell anything, in my opinion, because it makes a new high, right? You wait until, it starts to break down. So this risk in growth stocks has happened very quickly. So, you're not going to make all the right moves when something like that happens that quickly. I had walked through over the last couple of weeks. I had tried to buy the dip in strong earnings names, um, and they kept breaking down. And that's just part of dealing with a market dip and market correction. Every market dip or correction is a little bit different, and to see names like that being at all-time highs and then take a haircut of 15% and within a week, week and a half, you know, as the like IBD 50 ETF did, is not normal, right? But it's probably not normal too. So again, you have to take these things with a grain of salt. It's probably not normal how expensive a lot of stocks got too, right? So, is it again, this is not normal to see that fast of a sell-off, but these stocks have been very expensive, and I talked about that last week in previous videos. I'll leave it there, guys. Guys, have a great night and be patient with this market. Good setups will materialize, but you've got to get through the pain that we're going through right now. Have a great night.